Hey traders, welcome back to the weekly Forex Forecast. Coming up this week, we are looking for further declines in the DXY, and last week DXY shorts were something I highlighted in last week's video, and we had this sell-off. We just kind of started hanging around at the end, and this pattern very often corrects, consolidates, and then follows through to the downside. So very good chance of further downside next week in the dollar. I am going to be short or do nothing in the dollar, and US dollar shorts make up the top setups in my watch list that we'll be going through in today's video. Now, something very important to announce before we move on to the scores is that many of you have been asking, and from today onwards, anybody who signs up to GMT will get full access to the Hedge-Trading app as part of their GMT subscription. You will now get full access to the Hedge-Trading app as a member of GMT as part of your subscription. So that is available from today, and anybody who is already signed up as a GMT member, don't worry, you don't need to do anything. You will also be given full access to the Hedge-Trading app as part of your subscription. You don't have to take any action. That will all be done for you. So let's go and have a look at the scores for the currencies coming up this week. Okay, so let's have a look at the performance metrics, and I want to start with the Japanese yen. Now, the Japanese yen is not something I'm looking at in today's video in terms of setups in my watch list because it is negative at negative 46, but we're seeing it troughing or bottoming in the performance metrics, and this started at the beginning of the month. And you can see the green arrow here is reflecting the fact that this was in fact down at negative 100. And then we started to push up. And I have been short or do nothing on the yen for quite a long time. Those of you following along with the weekly Forex Forecast videos will know really the yen has been a short or do nothing. However, this is important going into this week, even if we're not looking at trading the yen itself. Why? Because as we've started to see the yen troughing or bottoming in the performance metrics in the data here, quantitatively, in the data, we've seen the performance metrics bottoming. And I tweeted out on the 5th of March, which is this blue line right here, it was this day, that we're starting to see the performance metrics reversing, and you can see the leading nature of the data in the Hedge-Trading app, where we got the follow through, the confirmation after we actually bottomed in the performance metrics. And in fact, I tweeted this out a little bit later because we did bottom in the performance metrics somewhere in here. So we've got the price action following through. That was the early warning sign. But why this is important is this. As we're starting to see money flowing into the Japanese yen, it has to come from somewhere. Where's it coming from? The US dollar. And it does look like, and if you want to, you could perhaps look for further upside in the yen. Again, I'm not looking at the yen pairs in today's video, but I wouldn't short the yen. So what I would like to see is if we're going to get further upside, and I'm not quite, absolutely a buyer of Japanese yen yet, but I don't really want to short it. What that means is we're probably going to get further declines in the US dollar as money continues to come out of the US dollar and into the Japanese yen. And I would be very wary now about shorting the Japanese yen. So on that basis, I do think we see the US dollar continue lower this week. US dollar shorts are the top of my watch list, and we're going to be looking at those in today's video. But there's just one thing to pay attention to next week, which is CPI on Tuesday. We've got US CPI. So when we're talking about the US dollar pairs, I can either be short or do nothing. Buying the dollar next week is not an option for me. However, I'm going to be looking at those US dollar setups or trading them after CPI. Not before, after. And the second currency I like to the short side is the Canadian dollar. And what we're seeing here actually is a bit of a Goldilocks play, because when you see the dollar and the Canadian dollar, or the US dollar and the Canadian dollar, both in the negative side of the performance metrics, this is telling you not only do we have yields sort of coming down with the dollar selling off, but also we have the Canadian dollar selling off as crude oil is coming down. This is kind of disinflationary. So I am looking to be short the US dollar, short the CAD next week. I'm going to leave the yen because of everything discussed. And the third short currency I'm going to be looking at is the Swiss franc. And to the long side, I like the pound and I like the euro. And pound and euro tend to outperform when you get disinflation. So certainly pound dollar to the upside, pound CAD to the upside, and pound franc to the upside we're going to be looking at, followed by euro dollar to the upside, euro CAD to the upside, and then euro franc to the upside. And the third currency to the upside, although I don't like it as much as the euro and the pound, is the Aussie dollar. So we will also in today's video be looking at Aussie dollar set up to the upside, Aussie CAD to the upside, and I'm also going to be looking at Aussie franc to the upside. Okay, so let's have a look at the watch list, starting with crude oil, as we always do. Crude oil has been making its way higher. You can see it's making higher highs and higher lows, but it's really struggling. Every time it breaches the high, and we're in the daily chart here, it sells off. Breaches the high, sells off. On balance, I am kind of neutral on this market, but I favor shorts over long positions on balance. So what I'm going to be looking for coming into this week is any push up to take out the prior high, especially if we can push through here. As soon as we breach the 81.0024, crude oil becomes overbought in the week. So on that week, because these levels here are, you could think of them as overbought and oversold throughout the week. Once we breach this, especially if we can pull back and test the 81.80 roughly, this low over here, if we breach and we become overbought on the week and we test a prior low as broken support turning resistance, this is going to be a great place to look for a near-term short. I'm going to be looking for 1 or 2 days down in crude oil if we can push through, and especially if we can test the 81.81. Not my favorite setup, but it is on my watch list. I would be interested in shorts in this area to capture 1 or 2 days down. Okay, so the first Forex pair we're going to look at is pound dollar. Discuss the fact in the market selection part of the video that the pound is something which is right up at the top of the performance metrics, and the US dollar is not just at the bottom, but also has a continuing reason to stay weak heading into next week, with the Japanese yen reversing first in the performance metrics and then also in the price action. So what I'd like to see is going into this week, I would like to only be a buyer of pound dollar or do nothing. I cannot sell pound dollar. But with CPI on Tuesday, we do have the risk of this catalyst pushing pound dollar into its second lower bound down here at the 1.26. Sometimes this happens when you have a catalyst. Most of the time, around 70% of the time, the market will stay between these levels. Hence why, if we breach this level during the week, you have a good opportunity, a high probability opportunity to buy that, you know, if you're looking to be a buyer and it breaks the lower bound, or sell it if you're looking to be a seller and it breaks the upper bound. So I'm going to talk you through the CPI setups that I'm going to be looking for. First and foremost, I expect this market to do nothing going into CPI, just to consolidate and to correct. This very often happens leading up to serious or significant interest rate decisions, CPI reports, you know, big news events. So I expect it to do nothing. Then I'll be looking for one of two things. Either it comes out fairly neutral. In other words, it's a nothing print. If it comes out pretty much as expected, I would just trade this as a normal setup. So I'll be looking for pound dollar to breach the 1.275. And if we have basically a non-event and then we move our way down to the lower bound and we test it, I'm going to be looking for a near-term buying opportunity below the 1.2751. And I'm going to be looking again to capture 1 or 2 days reversal in pound dollar. That's if the event itself is a nothing event, if it comes out as expected. If we see CPI coming out softer than expected, what you're most likely going to see is, of course, a rally to the upside, because this will be bearish for the dollar. Then on a softer CPI print, I would be looking for that pullback, and you can look for the follow-through trade into the 1.2964. And the third outcome is if we have a hotter than expected CPI print, and this setup will be the same for all of the dollar pairs we're looking at. If we get a hotter than expected CPI print and we see the pound really sell off and it pulls back maybe on Tuesday, and then we get the CPI report and it sells off down to the 1.26 on a hot CPI report, this would be the second place, especially if we breach this, maybe take out these lows. This would be the second place I'd be looking for a near-term reversal for 1 or 2 days in pound dollar. So we have, if we get a softer than expected CPI, you can look for the breakout and follow through. If we get a nothing event and it comes out as expected, I'll be looking for a buy from the lower bound. Or if we get a hot CPI report, we get a rally in the dollar and we breach the 1.2644, this is the second place down here after the 1.2751. I'll be looking for a near-term buying opportunity in pound dollar. So you have 3 places there, depending on the outcome of CPI, that I'm looking to potentially buy this asset, but I cannot short this asset next week regardless. Next is euro dollar. Now the same rules apply for me heading into next week. I can only be a buyer or do nothing. I'm looking for this market to correct into Tuesday. If we get an as expected report and not much happens, I would just look for the first lower bound. So we breach the 1.0852, we become oversold next week. And if we test these lows, that would be a great place to start to look for a reversal as we become oversold and we take out prior lows. That's where I'd be looking for 1 or 2 days up in euro dollar next week. The second thing is, of course, if we just correct and then before we take out the lower bound, we get a softer than expected print. In other words, inflation comes in lower than expected. And what does that mean? Inflation comes in lower than expected. That means the Federal Reserve can reduce rates sooner than expected. Therefore, this is negative for the dollar. You would see euro dollar rallying, and then you can look for the follow-through trade on a softer CPI print into the 1.10219. And the third option, of course, is if we get a hotter than expected print and we see euro dollar sell off versus the US dollar. If we do that, we breach the 1.0767 and we take out these lows, that's going to be a place I'd be looking to fade that next week for 1 or 2 days up. So again, you've got the 3 different outcomes of CPI. This is a plan. This is what I'm looking for. How it materializes remains to be seen, but I'm planning to be reactive, depending on how that news event comes out next week. Again, I can only buy this or do nothing. I cannot sell this market next week. And the third US dollar pair is Aussie dollar. We do actually have this near-term reversal. You can see the break failed to make the low, and we have this kind of head and shoulders or inverse head and shoulders reversal. And we've got this with momentum. Now, the chances of this just reversing and selling off and not looking back are quite slim. So I can either be a buyer of this or do nothing. I cannot short this. What I'd like to see again is wait for CPI to come out. I expect this market to do nothing. Then if we get an as expected CPI print, I would be looking for a normal trade below the 0.6547. So we breach this, especially if we pull back and test these highs. So we become oversold on the week by trading below the 0.6547. That kind of puts us in the area we can start to look for longs. And then we test a broken area of resistance turning support at the prior highs. That would be a great place to look for 1 or 2 days to the upside in Aussie dollar. If we get, as already discussed, a softer than expected print and we see the US dollar sell off, you can look for the initial breakout, and then the following day, maybe Wednesday, look for the pullback, and you can look for that follow through into Thursday, Friday. And the final setup I'm looking for is if we get a hotter than expected print and the US dollar rallies and it pushes Aussie dollar down below these lows and below the 0.6470, this is going to be a place as well that I would look for 1 or 2 days reversal in Aussie dollar next week. Okay, so moving on to the CAD pairs, looking at pound CAD, you can see we are starting to make, there's a high, we have a higher low, and now we're breaching the prior high. So I do like this further upside. It is also ranked quite highly in the hedge dash trading system. And we have finished last week with this rally, with this momentum to the upside. So going into this week, I'd like to see this continue. What I'll be looking for is this. I'm going to be looking for a pullback, a consolidation, and I'm looking for a test or a breach of the 1.72180. Once we break this level, we become oversold on the week. And if we take out this low, this is going to be a great place to look for 1 or 2 days reversal to the upside. And as usual, if we pull back and we fail to get to the 1.7218, but instead we start to break out intra-week with momentum, you can look for the pullback and the follow through into the 1.7457. Next is EurCad. Now, EurCad is kind of chopping around. And again, just remember, depending on how we look at these charts, the levels may look bigger or more narrow, wider or more narrow. So it can be distorted by how far I zoom in on the charts. But every single range you see in this market is for the upcoming week. So any pullback in this market next week, I'd like to see this take out the lower bound. And this is pretty nice because we have a prior high over here. We have a low here. We have a low here. We also have a low down here if it does come here. But if we breach the 1.4655, we become oversold on the week as we're trading into prior support and also over here prior resistance in a market that has a good chance of moving higher overall next week, or at least failing to go down very low. So if it does sell off, it should be capped. So any breach of the 1.4655 next week is the opportunity to step in and start to look for 1 or 2 days reversal to the upside. And if instead we start to break out intra-week, so we fail to test this level, we just consolidate and maybe break out with momentum, that's your opportunity, if you so wish, to step in and look for the follow through into the 1.4844. Very often you may only get 1 follow through, sometimes 2 in a given week, but usually in any asset you'll probably just get 1 follow through setup. And the final CAD pair is Aussie CAD. We've broken out of this kind of bull flag, you see this consolidation, and we break out with momentum. What I'd like to see though is I'd really like to see this pull back and breach the 0.8863. This is where we get the high probability setups intra-week. So any pullback in this asset, especially if we come back and test this high, so we breach broken resistance turn support right here. So anyway, you could draw kind of zone down here between the 8863 and this prior high. But if we breach this, we become oversold and we start testing these levels, this is where I'm going to be looking for 1 or 2 days reversal in Aussie CAD to the upside. And if we start to break out before we test this level, so you see momentum come into the market like this, that does set up the opportunity to follow through trade this into 0.90048 for those of you who trade those kind of bull flag setups or like to trade intra-week like that. Okay, so wrapping up the Forex universe with the Swiss franc pairs before we move on to gold and silver. Starting with pound franc. So the Swiss franc pairs are not my favorite pairs. My favorite pairs are US dollar short pairs and Canadian dollar short pairs. However, as a kind of third option, I do also have the Swiss franc pairs on my watch list. So what I'd like to see is any pullback in this market, especially if we can take out the prior low. There's another high over here. This is great because this sets up prior resistance. So you break resistance, turn support, and we also are testing prior lows. So if we breach this level at the 1.1200, we become oversold during the week. That is, especially if we come down and test this high, that is going to be an opportunity to start to look for 1 or 2 days worth of reversal to the upside in pound franc. And of course, if we break out intra-week before we test the lower bound, as is often the case, does happen, any pullback, you can look for that follow through bull flag into the 1.1373. Next is Euro franc. Now, I can either be a buyer of this market or do nothing. I cannot sell this market. So what I'd like to see is, I like also the prior high here. If we come down, I'd like to see this consolidate or correct or pull back into the 0.9537, in fact breach this level. And the deeper we breach this, the better really. But if we start to breach this level, if we come back, maybe we don't reverse straight away at the high, but we start to pull back and test this low. And actually often I prefer trading into lows. You know, if I'm looking to buy, I really like, you know, the testing of prior lows more than prior highs. So if we pull back anywhere below the 0.9537, I'm going to begin to look for an opportunity to buy this to the upside, especially if we test this low. And I'm going to be looking for 1 or 2 days up in Euro franc. That's really what I'm trying to capture. I either day trade it for 1 day, a solid up day, or, you know, sometimes hold it for 2, maybe 3 days. But generally speaking, 1 or 2 days worth of move to the upside is what I'm looking for. If we break out intra-week, however, before we test the lower bound, again, you can look for that potential bull flag setup into the 0.9664. And the final franc pair is Aussie franc. We actually broke the prior high here with momentum. This is quite a nice setup. So what I'd like to see is any pullback in this market. If we can breach the 0.5762, below this level, we start to become oversold during the week. And this sets up the perfect opportunity to start to look for 1 or 2 days reversal to the upside in this market. And again, if we start to make our way down towards there, because very often, you know, you do correct to start the week. If we start to correct, but instead of testing the 0.5762, which is really where I like to take trades from, that's where we get the high probability moves. But if we break out with momentum, you can also look for that kind of bull flag and follow through trade into the upper bound at the 0.5868. Now, if you trade into the upper bound and you get involved intra-week, this of course is a profit-taking opportunity, because once you breach this, you have roughly a 30% chance of continuing and a 70% chance of pausing or reversing. Okay, so wrapping up the video with gold and silver, starting with gold, and out of the two, I prefer gold to the upside. But just like last week, because of my bearish bias on the dollar, I do favor upside in both gold and silver. Now, last week, this was a market, I said to you, I can either be a buyer or do nothing. I cannot short this market, and gold is really outperforming to the upside. So what I'd like to see is, I'd like to see this market pull back and correct, because it has been moving pretty almost vertically. It's pretty steep here. Any pullback and consolidation is simply viewed as an opportunity to look for buys. And what I want to see is, I want to see a breach of the 2131.52. If we break down below here, we become oversold on the week. So we become oversold in a market which is doing this, right? That's what we're looking for. We're looking for oversold in a market that is actually strong or, you know, we want to be a buyer of. So any pullback below, especially if we start to test this low, there's not many lows here really because it's so steep, but there's one right there. If we pull back, you know, between the 2134.52 and this low, this is going to be a great place to look for that buy the dip opportunity in gold. And I'm going to be personally looking for 1 or 2 days to the upside, but this could very well continue higher. And of course, if we start to make our way back down, because I do think we're probably going to correct, but if we start to make our way back down and we break out before we test the lower bound, you can once again just look for that kind of bull flag follow through trade into the 2223.79. I can either buy this or do nothing. I cannot sell this market once again next week. And last but not least, we have silver. Now, silver has just broken out of this reversal pattern here. You can see here's this inverse head and shoulders where we struggle to come down, we're chopping and correcting, we fail to make a low, and then we break out above here with momentum. There's the confirmation of the breakout. So I do expect further upside, not just because of this pattern, but this pattern overlaid onto what we've already discussed with the dollar performance metrics being weak and this idea that we're probably going to see further again upside, in which case money is going to continue to come out of the dollar to flow into the Japanese yen. So on that basis, I can either be long silver next week or do nothing. Selling this is not an option. I want to see a pullback and I want to see a test of, and I really like the way this is set up because the confirmation point of the inverse head and shoulders, the breakout point, sits right at the lower bound of the 2348. So any pullback and a retest of the breakout level, we also turn oversold on the week. This would be a great place for 1 or 2 days reversal to the upside in silver. And if we start to make our way back to the breakout level, but we don't quite get there, and instead we break out intra-week with momentum, then you can look for that bull flag and follow through into the 25.14. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.